This week on 6 June, we have 3 webinars lined up for you. By 10 a.m., we have 2 webinars. The hidden risk of having most of your wealth in ESOPs and financial shift every woman must make before 40, exclusively for women. Followed by at 11 a.m., we have why good portfolios underperform temporarily and why that's normal. To join these webinars, we have given the link in description. Join today to make your weekend a happy learning weekend.
How did the boring stocks index fare in the month of May? Did we do better than the Nifty 50 TRI or did we do worse? If you invested 1 lakh rupees in the Nifty 50 TRI on the 1st of May 2026, on 31st, when the month ended, your 1 lakh would have become 97,784. So it was minus 2.24% return for the Nifty 50 TRI in the month of May 2026. But if you put 1 lakh in the boring stocks index, the same money would have become 96,860, translating into a minus 3.14% return for the month. Clearly, we have not done better than the Nifty. And let's see why we haven't done better than the Nifty. We didn't have enough stocks cushioning the fall seen in most of the stocks that are there in the portfolio. If we had at least a couple of stocks that performed positively during the month and gave cushion against the sharp fall in the other stocks, then we would have possibly done better in the month of May, but we didn't get that cushion. Most of the stocks gave negative returns. HDFC Bank gave minus 4.47% returns. Coal India minus 4.59%. Reliance Industries minus 9.7% return. That's the worst performing stock of the month. Then you had Bharti Airtel giving plus 0.1% return. A consolation, I would say. Maruti Suzuki delivered minus 3.34% return. ICICI Bank delivered minus 1.13% return. Larsen & Toubro also ended in the green, giving 0.33% return. Mahindra & Mahindra gave minus 1.96% return. Sun Pharmaceutical gave minus 1.33% return. And lastly, ITC delivered minus 5.31% return. So, 8 stocks gave strong negative returns and 2 stocks were very feebly in the green. And that explains why we had a tough month in the month of May. What remains to be seen is how the boring stocks performance plays out in the coming 7 months, because the last 5 months have seen a very strong impact due to the persistent and almost endless FII selling. So from Jan 1 to May 31, if you compare the performance of the Nifty 50 TRI with the boring stocks index, they are almost at par. The Nifty 50 TRI gave minus 9.67% return, while the boring stocks index returned minus 9.75%. Just a little more is the fall in the boring stocks index. But when you go to the stock level, it's almost a bloodbath in a number of companies. HDFC Bank was down 24.9%. Reliance Industries was down 16.1%. Bharti Airtel was down 13.3%. Maruti Suzuki was down 21.4%. ICICI Bank was down 6.1%. Larsen & Toubro was down 0.6%. Mahindra & Mahindra was down 19.0%. In this, I want to point out that we brought the stock into the boring stocks index on Jan 1 and it's been quite a disappointment till today as far as the stock price is concerned. But the business is not doing badly at all. It remains to be seen how the business performs in the rest of the year and how the market reacts to the business performance. Lastly, You have ITC, which delivered minus 16.9%. 8 stocks were in the negative from Jan 1 to 31st May in the boring stocks index. 2 stocks were in the green. The first one is Sun Pharmaceutical, which gave us 5.2% return, and the best performing stock is Coal India, which gave 15.7% return. So, 2 companies doing reasonably well, 8 companies doing quite badly. That's the story of the boring stocks index. If you go to the Nifty probably had better performance from more number of companies, but the companies that pulled the Nifty down have done all the damage, especially those companies with higher floating stock, higher free float, which generally get a better weightage in the Nifty. So the elephants have been the Nifty's problem, and having a few good horses still doesn't do much of a difference to the Nifty's battle to create alpha. Now let's see what happened in the boring stocks index since inception. Starting January 1, 2023, the boring stocks index has done extremely well. Over the period of 3 years and 5 months, the boring stocks index has given a 75.79% return. 1 lakh invested on Jan 1, 2023 is now worth 1,75,787. On the other hand, the Nifty has given a return of 35.05%. 1 lakh became 1,35,046 rupees. The outperformance since inception in the boring stocks index has been significant, but the near-term performance has been very underwhelming. It remains to be seen what happens to the boring stocks index for the rest of the year. We would make changes once during a year, and when we make those changes, we should be careful to strengthen this portfolio further and give it the kind of investment muscle building that will help it continue to outperform the Nifty and also give resilience to the entire boring stock investment philosophy. Let's see what we do. It's a very interesting year. It's been very testing for both the Nifty and the boring stocks index, and the news is that we haven't done any better than each other. Thank you for watching this video.